Is the AI bubble about to pop? The warning signs nobody wants to talk about. What if I told you the biggest threat to the economy right now isn't inflation, war, or housing, but artificial intelligence? Not because AI is too weak, but because it might be the biggest financial bubble since 2008. Before you invest, before you celebrate the next trillion-dollar valuation, you need to hear this. And if you want more deep dives like this, make sure you subscribe, because this conversation isn't happening enough. Some financial analysts are already saying it out loud. The AI bubble is real. It's going to burst. And history tells us to take warnings like this seriously. We've seen this before. The dot-com bubble of the late 1990s wiped out trillions of dollars and nearly 200,000 jobs. The housing bubble of 2008 triggered foreclosures, bank collapses, and a global recession. And before that, a stock market bubble spiraled into the Great Depression, devastating the economy for nearly a decade. Every economic bubble follows a similar pattern. An asset starts rising in value, not because it's immediately profitable or even useful, but because investors believe other investors will buy in. Money floods in. Debt piles up. Leverage increases. Eventually, far more capital is invested than the asset can ever realistically return. When that reality becomes impossible to ignore, the bubble bursts. The biggest investors often see it coming. They cash out early, quietly, and strategically. Everyone else is left holding near-worthless assets. And when the damage threatens the entire economy, governments step in with massive bailouts funded by taxpayers. Artificial intelligence fits this pattern almost perfectly. Yes, AI has real potential. It could transform healthcare, science, logistics, and productivity. But right now, market valuations have raced far ahead of reality. The value of major AI companies has exploded in just a few years. Some of that growth is based on legitimate optimism, but much of it is driven by hype, aggressive marketing, and massive deals between AI companies that inflate valuations and lure in even more investment. Ironically, the hype itself may be artificial. According to an MIT report, around 95% of companies that have adopted AI tools are not seeing meaningful financial returns yet. Meanwhile, some of the biggest AI companies are losing billions of dollars every year. Others are taking on increasing levels of debt just to fund AI data centers and infrastructure. Even Jeff Bezos has warned that during moments like this, every experiment and company gets funded, making it difficult for investors to separate good ideas from bad ones. That's not innovation. That's speculation. What makes this situation especially dangerous is scale. AI isn't just another sector. It's now propping up the entire US stock market. The 7 largest technology companies tied to AI dominate major market indexes, meaning if AI stumbles, the entire market feels it. By some estimates, investments in AI data centers and infrastructure have accounted for more than 90% of US GDP growth so far in 2025. That's not diversification, that's concentration risk. While AI has created new billionaires and pushed tech valuations to record highs, the costs are quietly being passed on to everyone else. Dozens of states have approved massive tax exemptions to attract AI data centers, often worth hundreds of millions of dollars. Electricity bills are rising to meet AI's massive energy demands. Water supplies are being strained by data centers that consume enormous amounts just to stay cool. Yes, data centers create jobs, but many are temporary and nowhere near enough to offset the jobs AI threatens to automate away. At the same time, the real economy is struggling. Housing remains out of reach. Healthcare costs continue to rise. The job market is slowing. Prices are climbing due to trade pressures and tariffs. Yet headlines keep celebrating record-breaking AI stock valuations. If the AI bubble bursts, which corporations win and which fail isn't the real issue. The real danger is what happens to working families. People whose retirement savings are tied to the stock market. People already living paycheck to paycheck. People who could lose jobs, savings, and stability if an AI-driven market crash triggers another recession. And if that happens, there's a serious risk of yet another massive government bailout, once again protecting big tech while taxpayers absorb the damage. This isn't meant to scare you. It's meant to make you aware. The future of AI is not inevitable. It's still being shaped. We can support innovation without allowing unchecked speculation. We can demand transparency instead of hype. And we can refuse to let a handful of corporations gamble with the entire economy. If the AI bubble bursts, we cannot repeat the mistakes of the past by endlessly inflating tech profits while ordinary people pay the price. And if you care about where this economy is really heading, make sure you're subscribed, because these are the conversations that matter.